Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The market stabilization phase continues to seemingly be over, with prices initially accelerating higher, then declining lower before starting to move higher again this week. In all this, the market is steadily moving higher up and away from the supports that have run this market for so long. Just to clarify, the key congestions that are now supports below are and have been between 97.50 to 99.95, between 93.95 to 96.06, and between 91.83 to 91.86. 4 weeks ago, prices pierced and stabilized over the bright red shallow bull channel from mid-May to late September, which is currently at 97.29 to 10.241. Initially coming up against the resistance of the dark blue middle time, which is currently 10.413, before challenging it, overcoming it, and turning it into support. Prices then challenged the next series of resistances made up from some previous all-time highs at 10.745 and 10.847, piercing but not closing over the latter, which was the March 22 high, and halting intraday at the 11,000 level before coming back to rest for a while on the dark blue middle time, before making a fresh attempt higher. In the process of rising higher, the market had already achieved the target for the break above the bright red bull channel of 10.706, and now opens the question, a quite large question, as to whether the whole action since the low in April is perhaps a very large bullish halfway hesitation. If that is to be the case, then we could be looking at potential as high as between 11,400 to 11,500 area. It's this point that I feel obliged to point out that the dark blue upper tine of the same large bullish shift pitch hawk mentioned earlier currently runs up at 11,534, above the top of my daily chart, but it could be a useful dynamic bullish marker to remember. However, before all this, we have to once again punch up through and this time stabilize over the two previously mentioned former highs at 10.745 and 10.847, as well as the all-time high made in May at 11.104. One final feature, and it's at best an indistinct feature right now. The action since late September could be seen as a possible rising expanding wedge pattern, currently 10.461 to 11.398. It is not highlighted on my daily chart, as I'm not so sure of it as yet, but it might be there and is worth remembering, especially on any moves lower. LME 3-month aluminium. As I've stated here many times, there are a number of patterns, one within another, all happening at the same time, all affecting the market in their own way. Of all the features, by far the most consistent one has been and still is the bright red, shallowy bullish shift pitch hawk for the mid-December 23 to late July 24 move. Back in March and April, we moved below the bright red middle time, which is currently at 27.19, and down towards the bright red lower time below, currently at 24.10, consolidating and starting a fresh build-up, such that 5 weeks ago we were once again challenging the bright red middle time, this time from below, and then 2 weeks ago breaking up over it and utilizing it as a support for a fresh move higher. The initial move up was initiated by a mid-April to mid-August dark blue bull channel, currently 27.84 to 30.11. But if we pushed down below the dark blue lower bull channel line in late July, and in the process created a small sideways rectangle pattern with a base of support being the long moving average zone below on a closing basis, that's currently at 25.87. And what turned out to be a somewhat weak 50% Fibonacci line of the big old 2008 to 2022 move at 26.75 as the top of the rectangle. This topside 50% Fibonacci line gave way under pressure, initially in mid-September and then more fully in early October. Upon closer inspection, it was found that the route higher had been with the help of a shallower bright green bull channel, currently 2650 to 2756. The bright green lower bull channel line was robust enough, but not so the topside bright green upper bull channel line, and prices instead followed the dark blue, now broken bull channel higher, using it as an attractor, and in the process forming what looks like a third bull channel, highlighted in bright pink on my daily chart from mid-September today, and it's currently 2724 to 2850. This is the newest and to me the weakest of all the three bull channels, which is saying something considering how the others have given way. Now, 5 weeks ago I set up some primary targets for the break higher out of the original rectangle pattern. For primary target X up in the 2760 area, just over the 50% Fibonacci line of the November 2015 to March 22 move at 2753, and with a harder to reach secondary target X1 up in the 2782 area, up in some fairly free area overhead, one would suppose. Both these targets have been achieved and I will now retire them. Additionally, this break above the rectangle opened the door to look at the whole action since at least June, and possibly since April, as a possible bullish hesitation, with potential up to the 2880 area. I'll watch with interest what happens next. LME 3-month lead. The July late August dark blue descending wedge pattern saw prices edge out in early September, slowly sideways to higher rather than aggressively moving higher and hesitating around the various moving averages and the congestion, that thin congestion between 2001 and 2003, before making a quite shallow bright green early August to mid-October bull channel. It's currently 1989 to 2037. We've gradually followed this shallow bright green bull channel higher as it led us out of what turned out to be an earlier rectangle pattern. However, 2 weeks ago and even the week before that, we saw a false break higher, and then last week we saw concerted break lower that was ultimately stopped by the 50% Fibonacci line for 2025 at 1971, aided by the shallow bright red neckline extension to the August to December 2024 head and shoulders pattern, currently at 1961. We have since moved back up, and we are right now challenging both the bright green breached lower bull channel line and the first of the moving averages, the flatlining gold long moving average, which is currently at 1992. All this action has left us with an opportunity for October to become a possible monthly key reversal, a quite significant pattern at this stage, given the earlier sedentary action. Thus, if on Friday, the 31st of October, we have a close over 1997 or under 1986, then we'll be on. Anything in between would have a lesser outside month pattern. Well, right now we are looking at a lesser outside month pattern, but barely. Finally, there's one additional point I would like to make, and is a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down here in LME 3-month lead. Hence one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.